Holy guacamole, what a week. The stock market has been crashing this week and is actually presenting some nice opportunities. Hello everyone, welcome back to the channel. Today I would like to talk about what is happening in the market, why that is happening, and also show you guys stocks I just bought and stocks I'm watching to add to my portfolio or increase my position in if the downturn continues throughout the weeks. If you're new to my channel, welcome. Please consider subscribing and smashing that like button since it really helps the channel out. Also, I have a completely free Discord group chat, which link for that is down in the description below. So yes, this week we have seen some big players basically crashing throughout the week, and it is basically because of the inflation fear. Why, you may ask? Well, first let me explain how inflation and interest rates affect the stock market. Treasury yield is a return you will receive while investing in Treasury bills, notes, or bonds, which is basically the same as the interest rate the government pays to borrow money. Treasuries are considered low-risk investments because they are backed by the US government. Treasury yield is important because that directly affects the interest rates that we apply to borrow money for a home loan or a car loan, for example. Now, when investors see that they can find other investments with a better return, the demand and price of the treasury drops and yield increases. That is what happened last year after the crash. Investors started seeing a way better opportunity in the stock market, so they started to sell their treasury to invest in stocks. But when inflation rises, valuation of those companies get affected and investors start seeing more attractive to invest in a safe investment as a treasury instead of a stock. First of all, the rise in bonds yields naturally does cause investors and cause markets to re-examine the view on equities. This happens because when interest rates rises, big investors, hedge funds, and others prefer to start investing in bonds. As I said, since stocks become more vulnerable because of high valuations, and investing in the government bonds is beginning to look more attractive for the first time in months, according to analysts. Because remember that when interest rates increases, companies' profits become less valuable in today's terms when investors apply a higher discount rate. Why? Well, a stock is normally valued with a discounted sum of its cash flow, which is when we apply a discount rate to the cash flow the company is generating, and this discount rate is basically known as risk-free investment rate in the economy, and when that risk-free investment rate rises, the value assigned to the cash flow drops, meaning that it is less valuable. Rising bond yields imply a rise in the risk-free rate and hence lower equity valuations. For example, if a company is expecting to generate $10 every year for the next 25 years and zero thereafter, the value of the stock would be $250. But $10 right now is worth way more than $10 in 5 years because of inflation. Now, the Fed is buying $80 billion in Treasury each month and $40 billion in mortgages. Powell says he expects the buying to continue until the Fed progresses on its goals. And while the Fed continues buying Treasury and mortgages each month, the interest rates will continue to be low, but as soon as they start selling or at least stop buying Treasuries, bond yield will rise back again. A rise in bond yields means a higher interest in the economy, and higher interest rates push up the cost of loans taken by companies, which makes it harder for them to borrow more money to invest. Also, companies with larger amounts of debt are impacted, and that impact is reflected in their valuations. High rates also affect us consumers since the cost on items such as home loans increases, and that reduces overall demand in the economy. Now, the stock market dropped mainly because of inflation fear. The first effect is that rising inflation can cause the Fed to rise short-term interest rates to reduce the demand for credit and help prevent the economy from overheating. And it is then when investors, hedge funds, and others start seeing more attractive to invest in treasuries instead of stocks, since it is considered a risk-free return, while companies' valuation get affected, which most likely will be reflected in the stock price. Since valuations will start to seem as a richer valuation, or companies will start seeing as overvalued companies. And obviously selling leads to more selling because of things like stop loss that get triggered or margin calls, which force people to sell their stocks. That is why the stock market drops faster than it goes high. Fear and panic selling is way faster than buying. But what am I doing? I'm currently adding to my positions and looking to start new positions since some stocks are presenting very nice opportunities. Remember about a month or two ago when you were regretting not adding more to one stock or starting a new position and the stock had gone up a lot? Well, this is the time to buy those stocks or add to your position instead of panic selling. 2020 taught us that with time, patience, and investing in good companies, in the long term, we will be more than fine. Yes, stocks like Lemonade are down over 18% in a month, but it is still up over 88% in 3 months and over 160% in a single year. Same with Tesla and almost every stock. As I said last year, when the crash started, you have to think long term. You have to think that stocks are getting on a discount here, and it is not a good time to sell a money-losing position because of this drop. Obviously, it's hard to see our portfolio dropping fast, but take this into consideration. The S&P 500 is only down 1.36%, the Nasdaq a little over 4%, and the Dow Jones only 0.24% in the past week, but they are still up massive in the long term. So this is not a crash like what happened in 2020. The S&P 500 went down over 31% in March 2020. That is a real crash. That is something huge and very concerning. Also, obviously, people start worrying about being in a bubble because indicators like the Warren Buffett indicator says we are in a bubble. The Warren Buffett indicator shows the market cap to GDP ratio, and as you can see, it was really high in the 2000 with the internet bubble, in 2008 with the housing bubble, and it is really high right now. And historically speaking, the Buffett indicator has predicted several America's most devastating economic downturns. Yes, that is scary, and that is why you have to invest in companies you believe in the long term and you feel comfortable with your investments. I feel comfortable with mine even though I have some high growth stocks, but I do not care about short-term volatility. Yes, it is obviously hard to see how we lose money. That is why I do not like to invest in gamble stocks or SPACs in my long-term portfolio. Maybe in the gamble portfolio or jewel portfolio where I'm willing to lose everything within days because I know that is a possibility. And I hate to say this, but this was actually long overdue. It is healthy for the market to do this. Now, what stocks I'm buying? But first, let me know which stocks are you watching and buying right now. So this week I bought Tattoo Chef in the low 20s, and yes, I know it got to $18 per share and I didn't buy it. I do regret it not setting an order, but still is a nice price in my opinion. I also bought more Apple stock at $123 per share. I bought Fubo TV at $35 per share and even more Tattoo Chef yesterday. Obviously, you don't want to go all in a single day because yesterday it dropped a lot, but you don't know if today it continues dropping as it happened with every crash. That is why my strategy is to always buy a bit today to be able to buy more tomorrow if it keeps dropping, so I don't spend all my available cash at once and then regret not having more cash when it drops even more. Now, stocks that I'm watching. First of all, it is important to find stocks that are selling off because the market is selling off and not because something is changing in their fundamentals. For example, I have been talking about Facebook. Facebook is undervalued right now, in my opinion, and even more if we compare it with the other FANG stocks. And it dropped even more yesterday. I'm watching also Wish, since it has dropped a lot and it is a company with a nice growth that I started buying about a month or two ago, and I think it has a nice potential, and even more since it is in a high growth industry, the e-commerce industry. Obviously, Tattoo Chef and Fubo TV, as I said before, I'm already adding more to those positions, but I do think it is worth adding to your watch list because their growth is excellent. Fubo TV might see an even higher growth with their new acquisition, the sports betting app, which could bring a nice revenue growth to them. Then the next stock is Apple. I know I've spoken a lot about this stock, but it is because they continue having a nice return even though they are such a mature company. Another stock I have been watching and have not added to my portfolio yet is Peloton. It is down over 21% since December and has been having incredible revenue growth. Obviously, the pandemic helped with that acceleration in revenue growth as everyone started exercising from home. But still, I do think it is a good investment in the long term. Another stock is Palantir. I talked about it last week on the different video analyzing their earnings report, and the growth they have been having is incredible. Plus, the stock is finally down almost 30% from its peak. Also, I do want to say that I do not recommend to only buy a stock because it is red today, because valuations do matter. It is not worth buying an overvalued stock because it is on a discount today, because sooner or later people will notice it is overvalued and it will hit you hard. Also, on red days or weeks, you cannot get emotional. Might be better to not even look at your portfolio during these days instead of panic selling and then regretting after. If you found all this information useful, please smash that like button to help the video to get to more and more people here on YouTube, and let me know in the comment section below which stocks are you watching or buying right now. Thank you everyone for watching and hope you enjoyed the video. Thank you and see you next time.